Bitcoin and Ethereum, what's his next move? Let's find out in the charts here, shall we? And I have to say the other side right now. Okay. Well, Bitcoin, wow. It's turned around and it's headed higher. We're going to talk about how high it can possibly go and what we're looking for. We're looking for definitely a nice breakout in Bitcoin and hopefully breaking out to the highs that we've mentioned many times before, where we see Bitcoin going. It's exciting times, even though it's scary times. Wow, there's lots of room to profit in bad times, right? Because the biggest fortune, even though we're coming to a financial collapse, the biggest fortunes are made in the shortest amount of time. So if you want to prepare for that fortune trend, that wealth transfer that it's going to occur, right? Yeah, you have to understand what's going on with the financial system in order to take advantage of it. So yeah, we're going to talk a little bit about that, just a little bit in today's episode, and also do some technical analysis on both Bitcoin and Ethereum. Alrighty, so my name is DaVinci Jeremy. I'm in the pipe 5x5, staying alive here in Dubai. Right, I was living in Chile. Now I'm staying here in Dubai, and I love it. All right, so let's get on to the show, which is talking about Bitcoin and what it's going to do, because hey, it's going to be an interesting ride. No matter what it does do, it's going to be interesting. Now everybody's telling me $10,000, $10,000. Bitcoin's going to $10,000, dude. It's going to $10,000, and I have to say that it's possible. It's just not likely. And when you have everyone saying it, it's even less likely. Okay, so just so you know, right? Not saying it's not gonna happen. I'm just saying the probabilities are lower because of the doom factor that's going into it. Now, this particular, if we take a look at this particular trend, it is bearish. There's no ifs, ands, or buts about it, because we dumped, and then we're kind of moving in a higher range, right? So we're making higher lows and higher highs. But this seems a whole bullish, right? That's crazy, just like we did before in the last dump before, around the $30,000 mark. We were trying to make some higher highs and higher lows, but boom, it just dumped on us, right? So this might be a repeat of the previous cycle there, but it's already done this three times already. So this year, right? There was a clear, it was some higher highs right around here. And then, it didn't quite pan out, and higher lows, but it didn't quite pan out. Now, for it to do it a third time, I don't know. This could be a trap, right, for the bears, right? So, and there's so many out there, right? I mean, if you take a look at the what's it called? Fear and greed cycle, it's still in extreme fear. And if it's in extreme fear, it doesn't mean, it's been in extreme fear for a while. And so it can't stay there forever, right? So just like when it was in extreme greed, it couldn't stay there forever either. So it had to break at some point. And so we saw in the bull market some back and forth on the extreme fear, extreme greed cycle. So we should see the same kind of thing as we go down. We're still in the bear market. We're still in the bearish situation here. Don't get me wrong. We're still in the bearish situation. Even if we do pump all the way up to around the 29, or I think it's really the $28,000 mark. And it doesn't mean that, hey, this is the new bull market. Yes, yeah. Don't get it twisted, because it will come straight back down here easily, at the very least, to retest you guys really want to buy Bitcoin at 20K? Let me see if that's going to be true. So that's what the price action is going to happen in the next little while. Okay, so looking at this, right? Again, I would say it's too late to be a buyer up here now, even though it's most likely going to continue higher. If you want to be a buyer up here, the only way you can do that is on the lower time frames and looking for some sort of W's to get you in on the buy, and making sure that you know, those W's, right, are like you take the appropriate action in the W. So this one was a decent one, not the best, but it was okay to take because we're in a trending market, trending in our direction. It's not the greatest W, but it's good enough. It's better than the one than this one, considering this a W. So this one was the right W to take, and you could see the payoff was there, and you could have, like, you know, if you did, let's just say, this is how you would trade this W, right? If you were trading it, you'd buy just at the breakout level. You do a 1-to-1 risk to reward ratio. Why? Because that's where the W, you know, basically tops out. You should not risk anything beyond that. And then maybe you reduce your risk to your you reduce it so that your stop loss is around the 2-to-1 risk to reward ratio. So there, right there. So yes, you would have taken a little bit of heat on that one, but then boom, you've hit your profit margin. Now, if you wanted to, you could have immediately moved your stop to to halfway, but you would have been stopped out, right? As you can see, and you still would have been stopped out in profit, right? But once if you're trying to go against the trend, to get profits and see if you can continue their profits, you really shouldn't. You really should not set your stops to 50% if it's against the overall trend, because the trend's not your friend, right? If the trend's not your friend, it's probably going to wick you out if you do that. So if you want to do break even, that's fine as well, but you should really be just taking profits if it's against the trend right away, and then waiting for the next trade. That's what you should do. Whether you do that or not was totally up to you. Okay, that said, right, you want to know where's the next trade, right? I've already highlighted that, but I will remind you that we're looking for more W's here on the lower time frames before you actually take a trade. Now, there's other ways to trade this. There's on the lower time frames. You have to do it on the lower time frames, but I'm going to stick to the M's and W's. The reason why is because trading this with like candlestick patterns is a little bit more trickier, because the candlestick patterns are only temporary, short term, and some, like for example, this was right. If we zoom in on this right here, you can see there was a clear candlestick pattern that you could have traded. These three candles was a fractal upwards, and once we broke this top fractal, that was a buy signal. But you can see that did not pan out well for you. So those are the kind of things, right, you can do, but you need to, if you're going to do that kind of thing, you have to look for other reasons why it should work out, not just stick to candle patterns. And this is why I don't show you guys how to stick to candle pattern, because there's just too many reasons you need on top of the candle pattern in order to take it. So you need like two other reasons in order to take this thing seriously. So yeah, I'm gonna leave it at that. Okay. Another way you could look for trades, right, is you could use the Rockin indicator. Of course, it doesn't work 100%, right? And you want to wait for the trend, the market trend to change. And, you know, you can see that, you know, if you use it with the W's, right, it worked really well here, right? Boom. You waited. Oh, look at that. This waited for this one, right? And yeah, sell could have got you a little spooked, right? But this buy over here was the right one. And you can see it took you right up there, the target. Now, we can go up to higher time frames to see whether or not it's a buy signal. And yeah, you can see we're in a buy zone from this candle right here, candlestick right here. So it's rocking and rolling right now. You could have ignored most of the sell signals, because we're in an upward trend on the lower this lower time frames. You can see that we're actually in an upward trend, so you can start switching to using lesser buy signal, sell signals, unless of course, right, you don't mind double dipping, but then taking the losses, because sometimes it will not work out your way, and you can just go, okay, well, I'll reverse the trade every single time, and that's fine, and just take the loss, and that's fine, right? Because this is a win, this is a win, this is a win, this is a loss, this is a win. Hello. Oh my God. So you can't expect wins all the time. And if you're winning, more than you're losing, or even if you're winning 50%, you are making more money if it's 2-to-1 risk to reward ratio. Right? So if you want to get the Rockin Brainer indicator, you can do so by heading over to payments.rockinbrainer.io. Links in the description below. Also, if you want to trade this, I suggest you trade this at bybit.davincij15.com. That's once again, that's bybit.davincij15.com. Just click there. The links in the description below and in the pinned comment. And yeah, you could also get a $4,500 bonus. Also do this. You could also do this at Femex as well. It's another one of those trading platforms that I use as well. Okay, Ethereum, it is just rocking and rolling. Woo! Wow, that was a beautiful breakout here. It was like, I wasn't sure we were gonna break out here, and then boom, away she went. Oh my goodness. Oh my goodness. Wow. We are seeing what's a clear W pattern here, a very good one, very clean one. Compared to Bitcoin, it's a very clean one. And if you want to wait for the breakout, you can do so at 1275, and that will take you all the way up. You will have to use this is your trade. And listen, understand one thing. If we're going to do this trade, right? You're going against the trend. You're going against the trend. You're going against the trend. Okay? So, with that said, this could fail on you, right? This could it could hit the target, but it's going to be very painful along the way, right? Being painful and slow, right? There's a lot of time, right? This is a large time frame here, right here. Let me delete that. This is a large time frame between here, this peak, to this peak. So you expect, right, the same amount of time frame to go up. So it doesn't mean it will do it, but it's somewhere along that same time frame. So with that said, this is the trade, the long-term trade, right? And so make sure any kind of losses that you take, it will not harm you. All right, so remember how to trade this. It's 1-to-1 risk to reward ratio. That takes us all the way to this previous resistance here. Yes, we have more room for it to go, and if you want to risk taking it all that way, you can, but remember what I said. Right? You're going against the trend. All right, so again, we take this to like 2-to-1 risk to reward ratio. It is a 10% risk, so you can't overall on your money. So if you were to do put in $1,000, right? You bet $1,000. you could lose 10% of that. It's $100. So make sure, you know, if you do a 10x, that will wipe you out at the what's it called? That will wipe out your $1,000 because you'll be liquidated probably even before it gets to your stop loss. So that's okay if $1,000 is less than 5% of your total portfolio, or even better, 1 or 2% of your total portfolio. So that's fine, right? And so yeah, you accept that risk. And so what you should do is always make sure that the losses stay consistently the same. So if you're always betting $1,000, or you're always betting $500 or $100 or whatever it is, so that you can easily see how well this 2-to-1 risk to reward ratio is working out for you. You'll know that it is working out for you. Okay. With that said, I want to jump quickly to this next point, which, I keep telling people whenever I do speaking engagements, right? At this point, we've got a little bit of a problem. And how do we know we have a little bit of a problem? Well, QE won't cause inflation is the first thing that the Federal Reserve said. Okay, some inflation, but transitory. Right? Meaning like 2 or 3%, right? Transitory. Okay, high inflation, but we're peaking, right? Is what they're saying, right? In Q3 of 2021. Okay, inflation may be not transitory, but jobs market wages growth is very, very strong. Just so you know, he's not the only one who's spitting BS, right? The only Federal Reserve chairman that spit BS in your face whilst the market was going down the whole time, right? Just so you know, Ben Bernanke did it, right? Janet Yellen did it. What's his name? Alan Greenspan did it. They all lied to your face, okay? Everything they said, the opposite happened. Okay, so you understand that, right? Okay. They need to hike aggressively to curb inflation, but no worries. Economy is very strong and a soft landing is possible. If a soft landing is possible, if they're saying a soft landing is possible, what does that mean, right? It means it's not only just a hard landing, it's going to be a complete crash. All right. Negative growth in Q1, but no recession risk. Okay. This is what they're saying. Okay, recession is coming, but it will be, you won't lose your home. Actually, what they're saying now is that a recession is coming. Not this. They're not saying this. They're saying a recession is, they're not saying you're not going to lose your home. They're saying a recession is coming, but it'll be a mild one. Mild one. I think an economic collapse is coming now. Okay? That's what's happening. They clearly stated that with their verbalization, right? You can deny it. Well, this time they might be right. And if you do that, you are doing that at your own peril. History shows what they do, and they haven't changed. They're not going to change today. So prepare yourself. Get some, the thing is, right? I'm gonna be frank with you. I would say get gold, silver, Bitcoin, and all that kind of stuff, but you have to understand, there's no place to go for money when they're selling all their assets, right? So when you're selling assets, right, people you sell assets into Bitcoin, don't sell assets into gold. They sell assets into dollars and treasury bonds and so forth, right? Okay, so with that said, right, it's basically a trap. for you guys, right? If you own bonds in a bank, that's theirs. If you own dollars in a bank, that's not yours, it's theirs. If you own equities in a bank, that's not yours, that's theirs. Just so you know, okay? So that means if everything's collapsing, the bank has a lot of things that they have to sell too in order to get cash, right? And as things are selling, right, that means the prices are dropping, right? That means real estate prices, stock prices, people borrowed against these things. They have to sell, and then they might be liquidated. They might not have to be able to pay. And if a bank, even though it prints the money to give you the loan, right? If you can't pay it back, the bank has to pay it back. All right? So the bank has to go around and sell different assets to pay back that loan. Now, if they don't have enough assets, or the assets are compromised, meaning that the prices are lower than what they can sell it for, what they thought they could sell it for, which is basically a lower price on their balance sheet, they might have it at a higher price called a mark to fantasy on their balance sheet, but they can't sell it because they call those assets compromised, and so they are broke, right? And so when they get to that point, your bank is done. So that is what's going to happen, and so they're gonna bail. They're being a collapse, and instead of doing like, oh yeah, well FDIC, I'm an FDIC insured, I don't have to worry. I would have under $250,000. You might want to research how much money the FDIC has, right? And you'll learn that they only have 0.4% of all the money that they need to bail out all these banks, right, if they were to go under. So, yeah, you might want to hold actual cash, believe it or not, physical cash. So you can, spend it to buy Bitcoin during that collapse, because a lot of people are going to be selling everything, and selling Bitcoin, selling Ethereum, selling gold, selling everything in order to collect cash, right, to pay other things, to pay off their debts, to pay for things, as this thing collapses. So expect something like that to happen, because regardless as much as we want to say that Bitcoin is money, the reality is there is not the place to go to place when people are selling all their assets to fund themselves and move forward. So that's the reality of things, and you have to accept it. Okay, that's it for today, right? I'm wearing my Bitcoin ring because I want the banks to read between the lines, because, eventually this will be the money and it will take them out, right? And if you can't read between the lines, right, I'm just going to help you out. There's the lines right there. All right, make sure you own some Bitcoin, even if it is going to be getting dumped on a little bit, because, hey, you don't know when that turnaround is going to happen. It's going to happen really fast, and you don't want to miss it. So make sure you have some during that, just in case you're not fast enough to move your cash into Bitcoin, because you're going to be scared, right? And you may not be able to go, okay, well, this is the bottom or close to it, so I should take my cash and buy it. You'll be very, very panicky, just like everybody else. Just like at the top, where you were like thinking it was going to $1 billion, you're afraid to sell. You're going to be afraid to buy at the bottom, right? So keep that in mind. So Bitcoin's real. Bitcoin's here to stay. Make sure you have some. Cheers.